Let's play through an example. Let's assume that you see an amazing investment opportunity today. You find the most amazing investment at a very good discount and you want to buy it. Well, what if you don't have any money to buy? That investment opportunity doesn't do you any good. You can have all the financial education, you can have all the research, but if you don't have the money to buy, you can't actually take advantage of it. And this is where you gotta know how to systemize your money. That way you can protect yourself through craziness, but also capitalize on opportunities. See, it's a 1-2 punch here. And this is where a simple thing that you can do is follow something like a 75, 15, 10 plan, which says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. Now, you're doing a couple of things. You're protecting yourself because now you always have money to save and invest no matter how much money you earn. If you get a $10,000 bonus tomorrow, well, you know what to do with that money because most people would say, ooh, I made some extra money. Let me go to the Rolex store, give me a nice new watch. Let me go to Cancun. Let me do something nice for myself. But wealthy people and the people that become wealthy always make themselves rich before they make everybody else rich. That means they use their money to invest and save before they spend all their money. You spending all of your money makes Rolex rich, it makes BMW rich, it makes Delta rich, it makes everybody else rich except yourself. I want you to make yourself rich first. Now, this is difficult, especially during a time where you have inflation issues, during a time where the economy can be slowing. I get it, it's hard. But here's the interesting thing. If you can do this, you'll always have money to invest. And now, when you have this money to invest, you can decide how you want to invest this money. Maybe you want to follow the ABB strategy. You just take this money and you just invest all of it into the markets. You don't have to worry about it because you're not really into the whole financial space. You're not into the whole paying attention to the markets. That's not for you. Great. Take that money, put it in the markets, ABB, and you let the money do its thing. Maybe you want to be more involved as an investor. You take this money and you put it into a different high-yield savings account that's waiting to be invested. Now, when you see the opportunity, you put that money to work. Maybe you say, I have some debts I need to pay off. I'm going to use this money to pay down my debts because that's an investment too. Because if your mortgage is 7% a year and you can pay it off 1 year early, that's a guaranteed 7% return on your money. When you put your money in the stock market, you're trying to get a 10% return. It's not guaranteed. I mean, you could see a 10% return, a 20% return, but you could also see a 3% return or even a negative 20% return. You don't know. If you pay off your debts 1 year early, well, now that's a guaranteed return. And I should also mention this. If you have any sort of high interest debt, like a credit card debt, a payday loan, you should not even be worried about investing your money into the markets. Right now, the best investment for you is to pay down the high interest debt as fast as possible because those debts are skinning you alive. When you're paying 15, 20, 25, 28% a year in interest to that credit card company, to the payday loan company, you're the reason they get to fly high in those private jets and have those big fancy buildings. And it's all coming out of your pocket. So before you go out and invest in the stock market trying to get a 10% return, pay off those credit card debts and the payday loans because those things are skinning you alive financially. So if you want to be able to actually capitalize on the investment opportunities, you got to know how to get your money right first. Now that we've covered how to get your money right, we've covered a lot of things. We've talked about now how we have seen similar things play out in the past, where we saw the 1970s, where there was a lot of government printing, which led to a lot of inflation, which led to higher interest rates, which led to an economic slowdown. Could we see something similar today? We'll ultimately see. Number two, if you want to be able to weather the storm, because we know recessions happen, nobody can time the market, and the people that are trying to tell you that a recession is going to happen or that it's going to boom are lying. They have no idea. But if you want to be able to weather the storm, no matter what the storm is, you want to have some real diversification for yourself, and you can figure out what that means for you. Then, how do you actually win when you see the volatility, when you see the craziness? Well, you can either be a passive investor and just ABB into the markets, or you can look for more of active investments. This is where you're looking for market shifts, and this is where when you see poop, well, that creates a great investment opportunity for you. But in order to take advantage of that, you actually have to know how to get your money right in the first place. You have to have the money to invest in the first place, and well, that's where having a good money system can help. The last thing that I want to go over in this video has to do with what I call the trap. And this is the emotions. The reason why so many investors lose isn't because they don't make a good investment. It's because they caught up in the emotions. Emotions are the enemy of profits. for an investor. And the reason why is the media is in the business of selling you a whole bunch of hype. I know this because, well, I own a financial media company, and a lot of the traditional media companies want to sell you either fear or greed because that's going to get you to click, and that's what's going to make them money. That's why I'm such a proponent for market briefs, because all of our news is in one email, so we don't have to give you all that crazy sensationalism. But when you start to go onto Yahoo Finance or Google Finance or CNBC and all you see is red, and it's talking about how markets are falling and how Wall Street is freaking out and how CEOs are selling, people can panic, especially if you're a newer investor. I mean, it happens all the time. And so when you start to hear about people selling and CEOs are selling and the Fed says the economy is going to fall and all these things, well, now it's very easy to say, okay, I'm going to sell. That way I can cut my losses. And that's the trap. You got to know your game. If you are a long-term investor, you got to stay a long-term investor. Now, you can change that if something bad happens. If something happens wrong with the company you're invested in, and this company is going to go bankrupt, or they change their CEO and now the CEO is running the company into the ground, or you found something else wrong with the company, sure, sell. But if it's still a good company and the price is just falling because markets are falling, well, that means maybe you want to be buying more, but that requires you to not keep doing what everybody else is doing. I call this channel the minority mindset because if you really want to become wealthy in this economic system, you can't keep doing what everybody else does. The majority of people are broke, drowning in debt, unhappy, and fat for a reason because they keep doing what everybody else does. And if you don't want to live like everybody else, you can't keep doing that thing. And when we're talking about money right now, you got to be able to break away from all the emotions, all the noise. You got to be able to find the opportunity. There's a lot of political anger. There's a lot of political emotion. There's a lot of heat. There's a lot of whatever out there. Look for the opportunity. Don't get caught up in the trap. Look at what's happening. Look for where the opportunity is, because that opportunity is what's going to help fill up your bank account, and that's what's going to help you feed your family. Getting angry and leaving angry comments on Facebook is not. So you pick what you want to do. Most people would rather leave the angry comment. I want you to be one of the people that's getting rich. You pick what you want to do, but that's the trap. Don't get caught up in it. And with that, I'll see you on YouTube tomorrow. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.